Alright guys, welcome back. Sorry, went out a little bit late, but I was looking at a couple things here. But anyway, I'm not gonna be here for long, so hopefully gonna try to stay at least maybe 45 minutes if I can. By the way, let's go to what I was gonna talk about. Okay, so let's start with the price of Jimmy. Of course, it's been kind of flat, from what I've seen so far. If you look at the daily chart right here, so today, of course, this is one candle represent one day, right? And it's been kind of trading between kind of this range right here, 1260 to 1440, right? And so yeah, not much there. Enthusiastic about the stock. If you look at the weekly, the demons is here again. I'm sorry, every single time, never fail. All right. So, one of the things that it wasn't like this earlier. It's hopeless, you guys. It's hopeless. Okay, 1 second. Okay, give me a minute. Sorry. Little doggy. Alright, so let's do this real quick. But anyway, I was kind of want to show you what's going on here. This is like within a week. This candle right here. Just representation of the price action. So it's kind of concentrated around here. This is a weekly candle. So it's kind of trading on the far side of this band right here. It's called Saturn ring. Not quite sure who would use this indicator, but anytime there is a spread like this, the momentum is down, right? If you look at when the momentum turned bullish is, hold on, when the, okay, bearish means that the green, you see this line right here, green cross under the yellow. So when the yellow cross over, when the green cross over the yellow, it's gonna become more bullish, and like kind of right here. So again, it's still consolidating. Not much volume there, not at all. And what are the news coming here? Of course, it's probably trigger some of the selling pressure here. But again, it's like it's only less than 1% of the shares being traded back and forth. So nobody actually sold. And if they do, it's only 1% anyway. So not much to see here. So the price is still good to grab, to get into. 1364, that's not too bad. So we'll see how long it's gonna keep it there. They're gonna keep it there. Okay, so let's get to Wework. Now, we all know what's going on with Wework lately, right? Of course, they're filing for bankruptcy a couple days ago. And what I've noticed is that, of course, I've heard of this particular company before being pushed by a very, very well-known media, right? And I'm sure you know who those people are. And what I've noticed is that, 2 years ago, this is what Jim Cramer said.
Opening bell. I got two big topics for you, Jim. One is Wework. The other is some Facebook news, which just came out this morning as well. Wework, obviously lots of people here ahead of this open. What do you think? Would you buy?
Look, I think that New York City is uniquely prepared for Facebook. For Wework, there's a lot of cities where Wework works. So yes, I would buy. I think it's an exciting story. And now that Adam Newman's not involved, it's less tequila-less. What do you want to call it? David, less tequila, less cannabis? I don't know. Help me here. You know what I'm talking about,
Less of all of it.
This is
exactly what you're talking about.
I think that it's much more of a real company.
Much more of a real company. Let me ask you about another story that may require you to take a shot at tequila. This is about Facebook. The Facebook Oversight Board saying that the company has not been forthcoming, according to the Wall Street Journal, about how it exempts high-profile users from its rules. What do you think is going to happen here?
I have been saying that the Oversight Board is going to function as the Supreme Court of Facebook. And what they say is going to be gospel. When I looked at the members of the advisory board, you cannot believe it. Not one of them can be so-called bought. They're all really incredible. They're some amazing people, and this is very damning. And it's frankly not necessarily unexpected, but it's how Zuckerberg views it. And does Zuckerberg keep his word that these guys are gospel, which is how I think he's positioned. He may say it's not gospel, but I felt it is gospel. So we got a lot to work on this one, Andrew.
But as an investor, do you like the stock?
The stock is very inexpensive. Very inexpensive, and it's not lost a lot of adherence. A lot of people felt that there was going to be a drop-off. Look, the only thing that would make you feel it's a drop-off is the change in the way Apple accounts for things. That's far more of an existential crisis than this, believe me. What are you wearing?
Jim Cramer, we're going to see you.
What are you wearing?
It's fall outside. I've been out here for 4 hours, so I put a little vest on. You don't like it?
Well, where'd you get that, at 5 Below?
You know what? It's fancy. It's fancy. Montclair.
Montclair. Okay, I like Montclair. That's not bad.
Okay.
Next time I want you to do Columbia, because I think Columbia stock could go up here.
These people, I don't know how they could live with themselves, right? Of course, Jim Cramer's obviously, we know who this person is. He's always like telling you to do the wrong thing at the right time for them, anyway. For whoever he worked for, right? Of course, he told people to buy into Wework here because of no cannabis. What the hell is these people talking about? But okay, of course, these people are supposed to be like smart, right? They have suits on. They tell you to buy into Wework. This is 2 years ago when they were starting to push Wework to the public, right? And of course, they were talking about Meta. If you look at the Meta stock price back then, so let's go and look at it. He told you to buy into this, right? Oh, it's cheap. Well, we all know what happened back then after that. So this is October 21st. Let's see. If I look at Meta, You see this? So he tells people to buy here, right here. It's cheap, right? What was it? October 21st. Hold on one second. 2 years ago. October 21st, 2021. Yes. So let's go and get the date correctly so I could show you exactly when these people tell you to buy into Meta. This is a weekly, so this is 18th of October 2023. So within this week, they are telling you to buy into this, right? Saying it's cheap, and guess what? A couple months later, boom. They knew that this was going to happen. They knew that they're going to dump this stock. Load it off to the public, and then when it's down here, they load it back up. You see how this run right here? You think this is retail? This is institutional. They let it move that way, so that you FOMO selling right here, and then FOMO buying, right? But again, this is due to Mark Zuckerberg, right? He was at the time heavily into metaverse. That's why he was changing it into Meta, and he spent way too much money hiring people, put some money back into the economy, right? But the investor did not like that, and most people, and who own most of Meta? It's institutional investor. Don't believe me? Look. 76% is institutional investor, right? It's owned by institution. And so these type of price action, they already knew ahead of time when to drop it, when to starting to promote it. Anytime they start to promote anything on particularly this particular media, so it seemed, you better try to do the opposite, or at least take a look at it. I'm not saying every single stock is this way, but most of them. I bet you anything. But anyway, so that's that. This is 1 year later. Let's listen in. Watch the rest of it. But this is a puff piece, right? It's like this guy coming from some other country and like the, what is it, the American dream type of thing, come to from a different country, come to America, become successful and very charismatic and very, ambitious, right? This is the segment, ambition, CNBC ambition, right? It just, again, to me, this is a fluff piece, and this is 1 year ago. If you look at the price, then January 17, 2022. Let's see what the price was. So I'm showing you this because I feel like, I know like most of you who watch my video are probably in agreement with that. But just off chance, anybody who got into GameStop and didn't know what's going on, seeing all this negative news on these type of media. Hold on. Yeah. Negative articles and all that stuff. It's for a reason. So that video was around, what price was this? January 18, 19, 20. 17, 2022. 17, 2022. So that's April, January 22. So at the time of this video right here, the fluff piece, okay? The fluffy piece. Wework was traded at $300. Okay? Now it's 80 cents. So where's the video saying that this company is ripping people off? It's a monopoly. It's a failure of a company. Fundamentally failed at what they're doing. Where? I don't see that movie. That article, and all that stuff. It's only after, right? They don't tell you that there's some problem here, up here, right? In fact, they want you to buy into it. Remember Jim Cramer? What is this, sad of a man here? October 21. So let's look at that one. October 21, 21. October 21, 21. Right here. The Wework was right here. Look at this pump right here. $600 if you buy it at the top. I bet you anything. You see this week right here? That's due to this pump. Okay? Perhaps it's just to trap you in, right? They allow it. They allow it to run. Okay? And so don't believe in the hype. Do not believe in the hype. When they tell you to buy, you better sell. If they tell you to sell, you better buy. Just like GameStop. They're telling you to sell right now. They're telling you that GameStop is no good. GameStop is something that is I don't know, fill in the blank, right? Ryan Cohen is a failure and all of that stuff. Why? Why do they have the incentive to tell you that? Okay, and then this is another one. Of course, this is 2 years ago, March 26, right? So let me speed it up a little bit.
Wework announcing it has agreed to go public via SPAC merger with Boex Acquisition Corp. That values the company at $9 billion, including debt. CEO Sandeep Mathrani was on Squawk earlier today discussing that deal.
So $9 billion, including debt. GameStop is 4 point something, half of that right now. $4 billion in market cap. And on top of that, you have $6 billion a year in sale. 1.1 or close to 1.2 billion dollars in cash, zero debt, and they're promoting you this BS, right? But they don't want you to buy GameStop. Why?
Approached by Boex and other SPACs. We looked at our plan. We've seen what we'd accomplished in 2020, and we'd seen a path to profitability. And we thought it was a good time to raise additional liquidity, to de-risk the balance sheet, and to make sure that we had a path to profitability. So sometimes, the path picks you. You don't pick the path.
Oh boy, this is right for us, Jim. I mean, $9 billion, including the debt, versus a valuation of $47 billion back in 19. Boex, we should also let you know, is run by Vivek Ranadive. He's the owner of the Sacramento Kings. This is more interesting than the Kings, I guess, lately.
No kidding. I'll tell you what's really compelling about this. It's Barry Stern.
It's so sinister too. Look at how the smug on this guy's face. One day it's like, these people are going to believe it.
This is more interesting than the Kings, I guess, lately.
No kidding. I'll tell you what's really compelling about this. It's Barry Sternlicht's quote. I happen to be a big fan. Barry got a bit of a Midas touch.
He's in the fight.
Yeah, and he is saying Wework is the leader in flexible space. Well, what do we need more than anything else? Who knows who's coming back and who's not? Is there a way we can get some flexible space? Well, Wework has it. So it's kind of like, it's just as it wasn't the company we needed a year ago. It is the company we need now. I thought, I have to tell you, I have been very critical of recently a lot of SPACs. I'm not critical about this one. But plus, there's a lot of heavyweights involved.
Yeah, Fidelity. There's Sternlicht, as you said, who, by the way, he made headlines on Squawk earlier in the week when he was talking about the SPAC market being, quote, out of control.
The bucket shops
in some places. I know you guys,
So the heavyweights are the people that Fidelity, right? Obviously, they're gonna sell it. They already accumulated a whole bunch of share already. That's why they want you to buy it at this price. And mind you, look at the freaking price up here. They want you to buy this range right here because before the SPAC coming, or before it was publicly traded, they bought it sub-dollar. It's probably lower than here. They already acquired the shares because of the debt and all that stuff. And they sell you at substantially more. than they got it for. And so they got out. This is exit liquidity. And of course, you have executive and all that stuff. I bet you anything, he sold for billions already before it collapsed like this. And who lose all the money? The people that listen to these people right here, right? And now, these people would never go to jail, right? Would never, get in trouble for what they're doing, what they're promoting, right? It's sickening. It's sickening. But anyway, I digress. This is, of course, another fluff piece. 4 years ago, I bet you anything it's before the SPAC and all that stuff. Yeah. But anyway, I'll link that particular one. And this is the most recent one.
Imagine one day your company is worth $47 billion. It is the poster child of a successful startup, insane amounts of venture capital, a fantastic culture and recognition all around the world. Then a few years later, it all comes down crash hard. Your company's now worth barely $100 million. Failed business model, no grasp of the fundamentals. It turns out it was all smoke and mirrors. This is the story of Wework. Hello everyone, my name is Antonio. I'm a finance manager at Google, and in this channel we talk about the latest trends in business and technology. I almost worked at Wework as a finance director in 2019. I remember taking the Eurostar from Paris to London and going through the little publicly available information I had. I went through the valuation once, twice, thrice. I couldn't get my head around it. To me, it sounded just like another real estate company providing office space. But the money was good, so I ignored my spidey sense and decided to give it a shot. I arrived at the offices and was amazed at the amount of glamour around the office. Free drinks, free food, game room, friendly staff, almost like a night out in the town. I loved it. But in the back of my mind, I was still wondering what they did and why there was so much hype about the company. I managed to clear every single interview round, but they went with someone else. Looking back, this was definitely a blessing in disguise. And why is that? Let me show you. Wework or WeDream? First, let's answer one important question. How did Wework actually work? Their business model was predicted on the idea of taking long-term leases on commercial properties, refurbishing them into modern co-working spaces, and then subleasing them on shorter-term contracts. A lot of their members were startups and freelancers, but some of the tenants were big companies such as Facebook and Microsoft. The appeal was clear. Flexible working spaces with modern amenities that businesses could use and without committing to a traditional lease. Great idea, right? The gig economy and remote work came at a perfect time. And just like adding wood to the fire, business started booming. Okay, so now that we get how they make money, but now let's answer another important question. What's wrong with this picture? If you think about it, what WeWork was fundamentally doing was rent arbitrage. In concrete words, you lease a building for 15 years at one rate and sublease the space to members on a monthly basis, for example. The logic here is that the revenue coming from the volume of short-term memberships at a certain price point will surpass the long-term lease payment for the same period. However, this is very risky because it creates a duration mismatch. In other words, if the economy goes south and people abandon their spaces on short notice, remember that they're paying a monthly fee with cancellation rights, WeWork will see a decline in revenue while still being liable for the long-term lease obligation. That would create a lot of pressure on cash flow, but also on profit. And it did. The company was burning cash and losing money at the same rate as revenue was going up. It was definitely not a good story, not even a good dream. At this point, you should have noticed two things though. The idea might sound great, but the business fundamentals sound very risky. But most importantly, I never referred to WeWork as a tech company. Huh? Yep. WeWork was considered a tech unicorn.
Another tech unicorn has filed to go public. This time it is WeWork.
See, these type of people, they hype it up like that, where everything is a tech, right? It's a tech company and all that stuff, right? And they would go to places like this news channel. CNBC is notorious, right? There's a reason why I always watch them. And I always take notes of who are they promoting, right? And then I try to stay away from them. Maybe a short-term trade here and there, but I just know that long-term, it's not going to be good for you. But whenever they tell you to sell something, like Gamestop, for example, it is, something that you might want to think twice about. It's like, why are they working so hard to try, to have me, a shareholder of GameStop, sell it, saying that it's worth nothing. But companies like this being pumped as a tech unicorn, it's like, really? Really? But anyway, so that's just how the company works in a nutshell. I'm not going to play the whole thing. I'll link down below if you'd like to watch that. But anyway, so, yeah, not much here. I was just going to end it here, but I will end it in another clip right here. But it just, yeah, shop at the store. You know, right now they have this one right here where you have the gift shops, a whole bunch of items that you want. So this is like to ramp up for the holiday season. Obviously, we are about to enter into GameStop. Enter into GameStop. Enter into Christmas time. And of course, you know, they make it easy. Look, if you can't afford anything, obviously $10 or less is a good category, right? It's funny that they have like $10 or less and then they have $25 gift card here. But yeah, so like you have these cute things and items that's reduced in price. Yeah. What is this? Like, oh, this is like Wii game and all that stuff. So I'll be shopping. I'm gonna shop a whole bunch of stuff here. This looks cool. Yeah, this is also cool too. So I'm gonna get a whole bunch of stuff from the clearance sales rack. I mean, you know, I don't have much money to spend here, so I'm kind of cheap in that way. But you see this particular one? They have their own brand here, okay? So don't be scoffing off saying that they're, you know, good for nothing here. Of course, they are, you know, doing their best, and hopefully they are doing well. And they will do well. And we all know that. But anyway, so I am going to end it here because I'm not going to stay for long, but I'm going to end it here, right here. So this is Jon Stewart. Obviously, I love him. I, you know, used to watch him. He's kind of turned a little bit more softer, not going after too many people lately. Of course, maybe he's older. He's just become less motivated to do those segments that kind of hard hitting to the politician that should be, you know, receiving the full brunt of people's wrath, right? I'm not saying like violence or anything, but you know, those politicians that does not take responsibility for their own constituents, right? People who are voting for them usually voting against their own interests, but then they turn around and say yes, something else, right? Of course, politicians are usually the liars, right? They lie in front of your face and then they turn around and do something else different. But anyway, so I'm going to end it here. Let's listen to this short clip right here. It has to do with corporation shipping jobs overseas in order to avoid tax screwing over working class.
Globalization allowed corporations to scour the planet for the cheapest labor and loosest regulations, devastating the working class. The auto industry left Michigan and Ohio for Mexico and China. Textile companies left North Carolina for Sri Lanka, Taiwan, and Vietnam. And heavy machinery manufacturer Caterpillar shipped jobs from Illinois to fucking, wait, what? To Texas? They went to Texas? That can't be right. Maybe current Texas Governor Greg Abbott can explain.
We have low taxes, reasonable regulations, right-to-work laws.
I think I understand now. As China is to America, Texas is to Illinois. Now, if you don't speak business euphemism, allow me to translate what the governor said. Low tax means less money to spend on infrastructure. Reasonable regulations means you weren't using that finger anyway. And right to work means weak unions, which means companies can get away with lower pay and fewer benefits, and they do. The last few decades of globalization.
So just loop. But anyway, so yeah, I mean, it's a good point to bring into, right? Of course, we've been, you know, as Americans, we don't produce anything anymore. We don't make anything anymore. And this is what the whole struggle is all about, is that, you know, we have outsourced the knowledge of producing things agriculture-wise, meaning, you know, we don't know how to plan anything in order to make this country better. I always think that, you have all the technology to figure out how to replenish a whole bunch of things. And the people keep saying, oh, it's too expensive. It's too expensive. It's like BS. You have the ability to print trillions of dollars. But for some reason, that money is allocated to things that destroy the earth, destroy things, destroy people. Of course, you're not going to have money to build anything, right? So when we prioritize destruction versus building things, it's very easy to see why these people gets to tell you to buy Facebook at this price, right? Because they want to destroy you, right? When Gamestop is trying to build something great here for the people. Now, I know, Ryan Cohen is here for himself as well. I'm not saying he's not, benefited from the price being higher. Not at all, but at least he's trying to do something different, much more different than any other CEO out there. And he's driven, he has the ambition to want to do something different, right? It's very easy to see that. I don't know why I'm drawn that correlation, but to me it's pretty clear because, again, anyone who wants to destroy, they only think that destruction make them money, right? And this is how they do it. It just so happened that they are in charge, right? They have the ability to kind of smoke and mirror, and deceive you into owning something that you shouldn't be owning, thinking that it's a tech bubble when it's not, thinking that it's a tech unicorn when it's not, and these people has been put in front of you for a reason. But yeah, again, and one of the big bank that owns WeWork was SoftBank or something like that. And so, the banks are the one who, usually benefit the most when this is happening. Anyway, so I'm gonna end it here. Seems like nobody typed anything. Let me double check. Nope. All right, you guys, I will see you in the next video.